Hello and welcome to episode 5 of Taking the Stress Out of Money, empowering women who want to achieve financial stability and leave a legacy for their loved ones. I am Judith Moore, a chartered accountant by profession and a financial educator for women. I am passionate about helping women who want to take control of their finances. The question is, are you that woman who is ready to make 2022 the year you finally take control of your finances by changing your spending and saving habits? Do you believe that you can have more money without necessarily going out and making more money? Last week, we discussed the rising energy prices, the increase in interest rates, and the rise in inflation, and what you can do about it as far as your money is concerned. Today, we are diving in to discussing what role your credit plays in saving you money on high interest rates and your journey to financial stability in general. Why is credit very important as far as your finances are concerned? Because it is very vital to achieving financial stability. Establishing good credit is the very first step in building a wealth infrastructure. People with good credit save hundreds and thousands of pounds every day. How is that? There are two very important elements of your credit report. These include your credit history and your credit score. It is important to understand the difference between these two and what role each of them plays towards saving you money. Let's start with your credit report. Your credit report gives prospective lenders basic information about you, your payment history, your accounts, and you as a whole. It generally tracks all credit-related activities you've ever been involved in. Your credit score, on the other hand, is a number that indicates your credit risk to lenders. Lenders take this number and, together with other pieces of information about you, like your age, your work history, your earnings, and they use it to lend money to you through credit cards, through personal loans, mortgage, a car loan, you name them. The amount they charge you for interest is dependent on what your credit score is. It is important that you get your credit score often, at least once a year, and you can get this credit score from your credit report absolutely free. Experian will give you a 30 days free period where you can download your credit report and get your credit score. You can cancel the account after the first 30 days period without having to pay any fee. Another good credit resource where you can get your credit report absolutely free and which is completely free throughout is Credit Karma. Credit Karma is a facility that will enable you check your credit all the time. It also sends you periodic notifications if something went wrong with your credit. For example, last week I got a notification from Credit Karma saying, Judith, your credit score has gone down. They notify you when something goes wrong. Then you can go in there and check for why and correct it immediately before things go wrong. I'll leave a link below for those who want to check out Credit Karma's website and create an account so that you can access your credit history at any time. It's completely free. As stated earlier, a good credit score can save you thousands of pounds over your lifetime. A good credit score means you're less risky, hence a lower interest rate on your borrowings. It is important to always look at the big picture when making your financial plans. Building a good credit record is a very important part of your journey to financial stability. Credit building tools include credit cards, personal loans, mortgages, store cards, you name it, anything that gives you credit, even your mobile phone bill. That is a credit agreement and it contributes towards building your credit. But the fastest way to optimize your credit is with credit cards. It is the easiest to get and most people can easily get one. It's unfortunate that most people use it the wrong way. So how do credit cards work? One of the biggest problems with credit cards is the hidden cost of using them. They are convenient to use, but if you don't pay your credit bill in the same month in which the liability is incurred, you end up paying way more than you realize. And this is what happens to many people. As a woman on her journey to financial stability, it is important that you understand the role a good credit score plays in your world-building journey. Therefore, get a credit card for yourself, but treat your credit card as a short-term loan and ensure that you pay your credit card bills in time. They will help you keep track of your spending, but most importantly, they will build your credit and improve your credit score. As discussed earlier, it is important to note that a credit card can be a convenient enemy. You can incur high charges, high interest, and worst of all, you can end up overspending on them if you're not disciplined enough. Unfortunately, that is the case with most people. But as a woman on her quest to financial stability, you must stay away from overuse of your credit card because this will plunge you into debt. Also, you must stay away from missing payments as this will lead to high non-payment fees, further taking money out of your pocket, and this will end up defeating the whole purpose as this will lead to a poor credit report. Using your credit card responsibly, on the other hand, will bring you great benefits. The best and simplest credit cards are offered by your bank. Do some research and find a credit card that offers rewards based on your needs. For example, if you like traveling, get a credit card that offers reward travel points. I have an American Express that gives me points for travel each time I spend on it. If you already have credit cards and you are in default or they are maxed out, it is time to take active steps towards paying them off and start using them responsibly to build an excellent credit score that will keep you more money in your pocket. Remember that the objective is always to find ways of keeping more money in your pocket without necessarily having to go out and earn more money. Remember that the objective is always to find ways of keeping more money in your pocket without necessarily having to go out and earn more, so that when you do earn more, you can manage it even better. When you're comfortable with using one credit card the right way, you can go out and find one or two more so that you can have a reasonable amount of credit available to you. Your credit utilization counts towards 30% of your credit score. Ensure you only utilize 1 to 25% of your available credit to maintain an excellent credit score. I hope you found value with this episode, and if you did, please subscribe to the channel and share this video with your best girlfriends. If you're starting out your journey to financial stability, we have a great free resource on our blog, mysavvyfinance.com, our financial success pack. It is packed with great information and resources that will help you make your financial journey smoother. I wish you a great day, and I'll see you on the next episode.